Amazing, amazing. Thank you all for making time to be with us this morning. It is my great pleasure to welcome you all to the launch of the Women in Financial Service Rwanda Study 2025. And even before we begin, I want to start with posing a question to each and every one of you. Hopefully, we can all reflect on it throughout the session today. And I want you to really think, what does progress really look like? Most of you sit in rooms where you're making decisions. Most of you are actually in the center of transformation when it comes to the financial sector, when it comes to the larger economy. But what does progress really look like? Is it when women occupy seats at the table? Is it when institutions achieve gender balance? Or is it really when talented women are able to move confidently from entry-level position to leadership positions? And are we really creating conditions that enable women to not only enter into this sector, but to also thrive, to lead, and progress within it? This event is bringing all of us here today. We all have influential voices within the finance, policy, regulation, as well as the development sectors. And your presence here really signals a shared commitment to turning evidence into action and conversation into measurable change. So as we begin, I invite you all to openly discuss, openly engage. We are going to have different activities that we're going to be doing, but we want all of you to be participating so that we can work together in really achieving the goals for today. We're going to start with the welcome remarks from distinguished leaders. We're also going to have an in-depth study that is going to be presented to us. Right after that, we'll have a panel discussion, and we want to hear you. You know, collectively, all of us are working together, sharing our ideas, our questions, as we continue to make today a success. My name is Naingwa Fiona Mothoni. Very, very delighted to be guiding you throughout the session today. And to formally open this event, it is my pleasure to invite a leader who has consistently championed financial inclusion, innovation, and equitable access to opportunities within Rwanda's financial ecosystem. Please help me join me in welcoming Ms. Agnes 𝐒𝐲𝐻𝐻, the Acting Chief Executive Officer, Access to Finance Rwanda. Let's give a big round of applause as she comes.
Honorable Governor of the National Bank of Rwanda, Chief Gender Monitor, Your Excellency, Chargé d'Affaires at the Embassy of the Grand Duchy of Luxembourg in Rwanda, founding chair of the Women in Finance Rwanda Foundation, CEOs, MDs, and Board of Directors, representatives of government institutions, representatives of development partners, distinguished guests, ladies and gentlemen, Madam Senator. It is my great pleasure to welcome you to the launch of the Women in Financial Services Rwanda 2025 study. I thank you all for joining us for this important occasion. Today's event marks more than the launch of a report. It marks an important step towards advancing women leadership in Rwanda financial sector through evidence, dialogue, and informed action. The Women in Financial Services Rwanda 2025 study seeks to deepen our understanding of the barriers and opportunities that shape women's career progression. I firmly believe that inclusive leadership is not only a matter of equity, it is a driver for stronger institutions, better decision-making, and sustainable economic growth. On the behalf of Access to Finance Rwanda, I would like to extend our appreciation to the National Bank of Rwanda and the Women in Finance Rwanda Foundation for the great collaboration on this initiative. We thank Oliver Wyman, our knowledge partner, all the institutions who shared with us insights generously, and the Study Steering Committee for all your contribution to the success of this study. We reiterate our gratitude to Access to Finance strategic partners, the Mastercard Foundation, the Government of Sweden, Co-Develop, and GET Foundations. Your continued support and shared commitment to inclusive development makes initiatives like this happen. We also extend our sincere appreciation to the Government of Rwanda for its commitment to advancing gender equality, financial inclusion, and women economic empowerment. Access to Finance Rwanda remains committed to working hand in hand with partners to translate the insights from this study into meaningful action for more inclusive, equitable, and resilient financial sector. As we engage today's discussion, I encourage all of us to ponder the findings of a study and to co-create actions we can take collectively as an ecosystem to drive stronger and intentional pathways for women to lead and to succeed. Thank you once again for your presence and partnership. 𝐿𝐼𝐧𝐚𝐥 𝐒𝐞𝐫𝐯𝐢𝐜𝐶𝐚.
Thank you. Thank you so much for the warm welcome. Our next speaker needs no introduction. As Governor of the National Bank of Rwanda, she continues to play a very pivotal role in shaping Rwanda's financial sector and advancing policies that support sustainable economic development. Help me welcome the Governor of the National Bank of Rwanda, Honorable Soraya Ntaganda, to come and deliver the keynote.
Thank you, Fiona, for hosting us this morning. Chief Gender Monitor, Chairperson of the Women in Finance Rwanda Foundation, Acting CEO of Access to Finance Rwanda, CEO of the Capital Markets Authority, CEO of the Rwanda Stock Exchange, senior government officials, partner at Oliver Wyman Africa, heads of financial institutions, dear colleagues and partners, all protocols observed. Good morning. Muraho neza. The launch of the Women in Financial Services study for Rwanda is an important milestone because for the first time, we have a comprehensive evidence-based picture of how women are participating, advancing, and leading Rwanda's financial sector. For me personally, it is a full circle moment. In 2017, I joined the Women in Banking and Finance UK after reading the Oliver Wyman 2014 Women in Financial Services Global Report. At the time, I fully realized two things. One, that the barriers that women face globally to rise through the ranks in the financial sector were not unique, but universal. Second, that research was important to quantify the magnitude of gender disparity in finance, but research alone was not sufficient. Action to address inequity was paramount. I'm therefore honored to join you all as we launch the first ever study of women in finance in Rwanda, and I would like to express my gratitude to our partners, the Women in Finance Rwanda Foundation, Access to Finance Rwanda, and Oliver Wyman who have made sure that this study is undertaken and shared with the wider public. Dear colleagues and partners, we celebrate the progress that Rwanda has made in access to financial services, with 92% of adults having a bank account, microfinance account, or mobile money wallet. However, we do recognize that a large gender gap still exists. In addition, when we look at the statistics for access to credit, women-owned businesses representing 40% of all our micro, small, and medium-sized enterprises in this country receive only a quarter of MSME lending. That the gender gap is not an accident. It is a structural reality. One may ask whether if we had more women in leadership positions in finance, we would close the gap quicker. The jury is still out. Nevertheless, the Women in Financial Services study aims to partly respond to the question. Indeed, the Women in Finance Rwanda Foundation, Access to Finance Rwanda, and the National Bank of Rwanda, Oliver Wyman, as well as Mercer, brought together different mandates and perspectives in service of a single goal: to replace assumption with evidence. That is the kind of collaboration that our sector needs more of. The study we are launching today earns its credibility through the depth of its methodology. It draws on data from more than 50 financial institutions, insights from over 1,500 professionals, focus group discussions, and direct interviews with industry leaders. Its findings rest on the voices and experiences of the people who build and sustain the financial sector in Rwanda every day. The picture that emerges is honest and in part encouraging. Rwanda has made genuine progress, particularly in women's representation at leadership levels in the financial sector, in the board of directors, in the executive committees, and at CEO and managing director positions. I do not want to preempt the results of the study, which we will be presented shortly, but I want to give an example using the National Bank of Rwanda's experience. 20 years ago, in 2006, BNR Board of Directors had 16% of women in its board and 25% women in management. Today, 55% of the central bank's board of directors are women. The management has equal parity, and the executive committee has 44% of women. And this is not a coincidence. It is the result of deliberate policy choices at national level, which gave equal access to education, to health services, to land, and equal opportunities to Rwandan women and men in the last 32 years. There has also been institutional commitment. The National Bank of Rwanda adopted its first ever gender mainstreaming strategy in 2022 with a commitment to make sure that we remove barriers for women in central banking, but also the entire financial sector that we regulate. But progress at the top does not mean that the pipeline is healthy. The study is clear. Promotion rates for women remain lower, attrition is higher, pay equity concerns persist, and women remain underrepresented in technical, strategic, and revenue-generating roles. These are not soft issues. They are structural inefficiencies that weaken institutional performance and limit the talent our sector can draw on. Beyond representation within our institutions, we must also examine what our sector delivers to women across the broader economy. Rwanda's 92% financial inclusion rate is a landmark achievement, one that reflects years of coordinated policy effort and institutional investment. But access is not the same as equity. Rwanda has made remarkable progress in financial inclusion, with 92% of women and 97% of men now accessing financial services. Yet, gaps remain. 53% of women use formal savings products compared to 65% of men, while only 8% of women access formal bank credit compared to 13% of men. Closing these gaps is essential for achieving inclusive economic growth, empowering women to fully participate in Rwanda's development. The cost of this gap is not only borne by individual women, it is borne by all of us, women and men alike. Across Africa and globally, the evidence is unambiguous. When women face barriers to accessing finance, to building businesses, or advancing their careers, we are not only limiting individual potential, we are constraining economic growth. Closing gender gaps in entrepreneurship alone, this is a figure that we are now familiar with since we launched the Women Entrepreneurs Finance Code, that closing that gender gap in entrepreneurship would add between $5 to $6 trillion to the global economy. And for Rwanda, the returns in business formation, job creation, household income, and economic resilience are significant and estimated at around $750 million, which is 6% of our GDP. And so these are not sheer numbers. These are a reflection of economic potential. And distinguished guests, dear partners, colleagues, inclusion is not charity. It is strategy. More inclusive financial systems are stronger systems, more resilient, more competitive, and better positioned to sustain long-term growth. This is not an aspiration, it's what the evidence consistently shows. And so where do we go from here? First, every institution in this room must look inward in a candid manner. Are your recruitment, promotion, and talent management practices creating equal opportunity? Are you retaining talented women or losing them to gaps you have not yet chosen to close? These are leadership questions, and they require answers from us leaders. Second, we must build financial products and delivery models that reflect the real lives of women as professionals, as entrepreneurs, as investors, and consumers. Designing for a default customer who does not, who does not represent half your market is both a commercial and moral failure. Third, regulators and policymakers, including the National Bank of Rwanda, must strengthen the enabling environment with greater specificity. Transparency and accountability cannot remain aspirations. As part of our follow-through in this study, the National Bank of Rwanda will advance requirements for gender desegregated data reporting across all supervised institutions. Fourth, we must invest in the young women professionals in finance, not just the top. Thank you. Even though it's a Monday morning, I will go through with a speech. So fourth, we must invest in the young women professionals in finance, not just the top. It is encouraging to see women in senior leadership, but sustainable progress depends on ensuring that women at every level, early career, mid-level, and senior levels have visible pathways, sponsors, and the structural support to advance. That requires institutions to set targets, track progress, and hold leadership accountable for results. Beyond young women professionals, we must also ensure that their male colleagues are part of this journey. Are there unconscious biases that both young women and men hold, which will in the future constitute a barrier to inclusive financial systems? And do we all understand that women are equally a critical source of talent and competitive advantage in the financial sector? This study on women in financial services in Rwanda offers a blueprint of concrete steps that our financial ecosystem can take to accelerate the full participation of women in banking, insurance, microfinance, the pension sector, and fintechs. And the benefits extend beyond women. Dear colleagues and partners, in Womenomics, a book published by Kathy Kay and Claire Shipman 15 years ago, one of the conclusions is that the most enduring lesson of the major economic and demographic shifts, which have increased the value of women in the workforce and created opportunities to redefine traditional career models, is not specifically about women. It is about talent economics. To quote their book, when challenging traditional organizations, they mention that organizations that cling to rigid workplace structures may lose highly skilled employees, and the institutions that succeed are often those that focus on performance, on flexibility, and employee engagement to meet the needs of their workforce, women and men. Rwanda has shown that when we set ambitious goals and commit to them with discipline and accountability, we achieve outcomes that others regard as exceptional. We know that Vision 2050 is not built on modest ambition. It is built on the conviction that no potential should go unrealized, not in our communities and not in our institutions. This study is not the end of a conversation. It is the starting point of a new phase of action. If we act on its findings, we will not only advance inclusion, but we will also build a financial sector that is more competitive, more resilient, and more worthy of the trust that every Rwandan places in it. I thank you and look forward to engaging disruptive but yet constructive discussions ahead. Murakoze cyane.
Very bold, very forward-looking remarks. Could we appreciate Honorable Governor one more time?
I wanted to start this morning, not with a statistic, but by inviting you to imagine a young woman. Let's call her Ineza. She graduates with strong results. She joins a financial institution here in Kigali, in one of the branches. She's ambitious, she's capable, and she's committed. She starts building her experience in her first few years. She sees a future for herself in the company, and she wants to lead. But over time, something begins to happen. She misses the opportunity to be involved in the company's big branch modernization project. In fact, she had no idea that staff were being nominated for the project. In any case, she doesn't think that she could have managed her childcare without the visibility of when she might need to stay late for troubleshooting or when she might need to join emergency meetings at the head office, as she sometimes sees her colleagues on the project doing. And she begins to realize that a number of her male peers who did the project seem to move faster. They have gained experience with the processes and the systems. They are more often working on visible, important assignments for the branch manager. But she's still ambitious. She has not lost her talent, even though she is taking longer than she had planned to do her master's. She has not lost her commitment, even though it's a challenge for her to spend her late hours at the office or traveling. But she starts to wonder whether the system sees her potential in the same way. This study was designed to understand the journeys like this that are happening over and over again across the sector. And we may ask why the study matters. And the reason it matters is that this is not just a gender issue. This is a business issue, and it's an economic issue. The financial sector is a really important engine and needs the best talent to shape strategy for growth, risk, innovation. If half of our population is underrepresented relative to their capability, institutions are not fully using the talent available to them. It's well proven in the corporate world that good representation in decision-making improves returns. It leads to better products and services. It avoids costly missteps. It fosters inclusion, which is multiplicative for economic growth. So the study was not just about counting up the total number of women in the sector, but understanding three core questions. First, representation. Where precisely are women in the sector working today? Second, career progression. Where are they advancing and where are they getting stuck and at what rates? And then third, the barriers and enablers. What helps women succeed and what prevents them from doing so? What do we need to change? The evidence base of the study is substantial. We gathered data from more than 50 financial institutions in Rwanda, and more than 1,500 professionals across the sector participated. And three key findings emerged. The first is positive. Rwanda outperforms global averages on women's representation in financial services leadership. The second is more concerning. We see clear evidence of high attrition early in women's careers. That is then followed by stagnation for many of those who remain in the sector. The third is also concerning, but hugely important when we think about what are the strategic levers for actions going forward. And that is that from the beginning of the career journey, women are clearly underrepresented in the types of roles that are known to carry people to senior leadership. So let's look first at the positive story. Rwanda has made incredible progress. Women hold just short of 40% board and CEO positions in the sector, 35% of EXCO positions. That is incredibly strong performance compared with global and regional benchmarks. And it's very important that we have this as to show the way, because it shows that progress is possible and has been achieved. It shows that leadership representation can change when institutions, policy, and society start moving in the same direction. But the representation at the top is just part of the story. When we look at the career pipeline, a much more complicated picture emerges. At the non-managerial level, women are very strongly represented. More than half, 56% of employees at the non-managerial level. But they account for 64% of the exits at that level. And that means that women are leaving before they reach the stages of the career where the leadership pathways begin. And you can see the effect of that. It tells us that the issue is not simply entry into the sector. Women are entering. The issue is what is happening afterwards. And for those who stay, progression is tougher. One of the most important findings in the study is that women experience about 30% fewer promotions on average than men across their career, and that gap increases with tenure. And it is not explained by average maternity leave periods, we checked. Another very important finding, ambition is not the problem. It was a hypothesis we heard many times, and we explicitly tested for this. Fully 75% of the women surveyed said they aspire to reach senior management or above. 50% CEO board EXCO level. The numbers for men were higher, at just over 80%, but it tells us something very important. Women want to lead. The ambition is there. The confidence in the system is not. So why do women leave, or why do they stall in their careers? The study unveils several factors, but if I group them into themes, I would say the first is really a challenge of balancing work and family responsibilities. This we heard in focus groups from individual leaders. We heard it across the survey. This, I would say, was and probably not surprising to many of us in this room, this is the biggest challenge and everything that comes with it. The second is lack of recognition, lack of opportunity, lack of visibility. The third is a perceived bias in promotion and career decisions, if I sort of summarize it under that. And the fourth very important theme is the culture of the workplace and the need for anti-harassment systems, the need for anti-bullying and safer reporting environments. These are all interdependent factors. They don't operate separately, and they compound over time. So let's think about Ineza. She misses out on one very important visible assignment, and then maybe another one. She might be coming back from maternity leave, and then she finds that career momentum is reduced. She receives less sponsorship, effectively. She may be encouraged towards support functions rather than commercial or technical roles. So over time, these are seemingly small differences, but they become huge career gaps for women. And that brings us to the third very important finding. Women are very clearly underrepresented in commercial, revenue generating, and technical roles. This matters hugely because not all roles create the same leadership pathways. And not all roles have the same, let's call it, space or level of representation within leadership in companies. So board CEOs that are looking for future leaders are they're looking for commercial experience, they're looking for people who have played revenue generating roles, credit, risk, finance, maybe technology experience. But if women are concentrated in support or admin roles and underrepresented in the sort of the power track functions, then leadership imbalances become much harder to solve. And the longer you leave it, the harder it becomes to solve. If you don't address the career track very early in the career, then it's really difficult to get the qualifications, the training needed to switch tracks. The study also shows us that progress is achievable. So we heard a lot of great examples, individual examples from companies and what they are doing. And we heard a lot of great examples from individuals saying what has worked for them and what has not worked for them. And institutions that are doing better clearly are acting deliberately. I think that is very important for us to take away. These are not accidents. They are providing early career mentoring. They're creating sponsorship opportunities from their senior leaders. They're supporting professional certification and technical training. They're making promotion processes more transparent. They're making recruiting processes, pay decisions more transparent. And they're actively planning succession. And I think very importantly, there's a mindset. They're recognizing that flexibility and performance are not opposites. So when managed very well, flexibility helps to retain strong talent. I want to spend a moment and really highlight the issue of workplace culture. This study showed that more needs to be done on sexual harassment and bullying. These create hostile environments, and it was a difficult issue for many people in the study to talk about. But we had some very important focus group conversations and individual conversations that really lead us to believe that these are much more prevalent than reported. So we think that there are some clear action steps around workplace culture that can and should be addressed. But there is no single silver bullet. The study points to 3 sort of accelerators or high impact actions that institutions can take to accelerate progress. And the first is setting meaningful targets. So targets don't mean lowering standards. They mean being intentional about removing barriers. And this allows capable women to have fair access to opportunities. The second is track and disclose progress. We all know that what gets measured gets managed. So institutions, companies should be looking at how to establish a baseline, track that over time, look at representation across different levels, look at your promotions, look at your pay, look at who's exiting, the distribution of roles, and not just overall headcount. And then thirdly, this needs to be established accountability needs to be established at a senior level. We saw that very clearly. What gets owned gets done. We know that too. So this can't sit just with your HR team. Your CEOs, boards, ExCos really need to own the agenda. And we talk in the report about the example of appointing a gender champion. But a best practice is really that this is owned at the CEO level. So if we return to the story of Ineza, the question is not whether she's talented. The question is whether the system around her recognizes, develops, and allows her to progress with that talent. So Rwanda has already shown what is possible. That should be recognized and celebrated. But the next stage of progress will require a lot deeper action and commitment to keep women in the pipeline, to keep accelerating progress, to move women into roles that shape business decisions. And it will require leaders in this room to make inclusion not just a value, but a management discipline. Thank you.
Thank you. Thank you so much. Let's appreciate her one more time for that detailed presentation. And even before we proceed, I'd just like to ensure that everyone has access to this study. There's a QR code that is going to be projected up on the screen. I'm going to give you 1 minute to scan, download the report so that we can all have access to it. And as you're scanning, in case you experience any difficulties, please just feel free, raise your hand. We have a member of the team who will come and assist you. Yeah, I'll give us just a few more seconds to peruse through the report. Just make sure we are all familiarized with what is in the study. Amazing. I'd also like to mention you can also visit Access to Finance Rwanda website, and you can still be able to also access the same report. That's www.afr.rw. And now we're just going to continue and really dissect what has been presented. We're going to go right into a panel discussion that will be looking at the same. We're going to hear real life experiences from people who are actually in leadership position, what they are doing, and the panel is on sustaining women's leadership in Rwanda's financial sector. How do we move from representation to progress? And to moderate this session, I want to invite all of you with a big round of applause to just usher our moderator to the stage, Ms. Vanessa Gatana, Manager of Financial Inclusion and Education, National Bank of Rwanda. Yes, let's escort her with a big round hand clap until she comes onto the stage.
Thank you, Fiona. Before I welcome my panelists, I just want to share an experience that I had last week. I had the privilege to attend an international meeting that brought together central bankers. And of course, I was wearing my badge, and one of the ladies caught sight of it, and she mentioned, "Oh, you're from Rwanda?" And I said, "Yes, I am." And she said, "We know Rwanda to have a very good representation of women in leadership." And of course, as it was, I had bragging rights. So I went on to speak about my country and the workplace that I work for. And I said, yeah, my institution is the same. This is how it goes. And then I asked, how is it over in your countries? One of the ladies was from Kenya. And I'll share her experience first. She mentioned, she's like, when I started out in my career, I met a lady who was in senior leadership. I was young, unmarried, and this lady sat me down and told me, for you to grow up in the ranks, there's a trade-off. You either choose career or you choose family. And she said each time she struggled to make it either with both sides, whether that was family or with career, she went back to her mentor and she said, I told you, there's a trade-off. You have to choose, unfortunately. And then the conversation changed. And this lady from Spain was sharing her experience. She's an EXCO member, and she said, I sit in the room, and one of the things that I've found challenging as a central banker has been promotion. She says, when I joined the central bank, for me to rise up to the position that I'm in right now, it took a while. And she says, sometimes I say things in the room, and no one will hear them, but my male counterpart will say it, and everybody will agree with them. So My panel today, do we have to have a trade-off, or can we actually set a place and an environment where actually women thrive? I'm privileged to be a product of sponsorship. I went through the ranks and I had sponsors, and my names were spoken in rooms that I was not in, and today I stand here before you as a leader in the National Bank of Rwanda. So without further ado, allow me to welcome our panelists, and we'll welcome with a big round of applause Ms. 𝐭𝐲 𝐒𝐿𝐵𝐵𝐵𝐵. She's a Group Executive, Human Capital Sanlam Alliance, the Chair, Bank of Africa Rwanda, and co-founder of Women in Finance Rwanda Foundation Rwanda. A round of applause. Welcome. Let's welcome Mr. Bujingo Konde, Managing Director of MUA Insurance. A round of applause. And Mr. Toritich Morris, I hope I didn't butcher that, Managing Director, NCBA Rwanda. And lastly, let's welcome Ms. 𝐼𝐻𝐧𝐚𝐧𝐿𝐤 Laurence from 𝐒𝐭𝐮𝐝𝐲 𝐒𝐞𝐫𝐯𝐢𝐲. Director General, 𝐒𝐭𝐮𝐝𝐲 𝐒𝐞𝐫𝐯𝐢𝐲. Welcome to the stage. So, good morning. We just went through the study findings, and I just want to give us each a minute. Was there something from these findings that was surprising to you? Just a minute to say if there's something interesting, something that was an aha moment for you from the findings.
Who do you want to start with? Yeah. And how does this work? Is it?
Yes, it is.
Oh, sorry. So maybe I can start as we go like this. It's not ladies first, right? Right. I think for me, it really translated into scientific terms what Women in Finance was feeling with their guts. So I think when Women in Finance started, it started with 5 women who were the founding members and 4 advisors who sat and said, we think there's something we can do. And they are across the financial sector. So you have microfinance, bank, insurance. And they said, but we don't know where to start. Yes, we know there's something we need to do, but we don't know where to start. But with our guts, we think that capacity building would be one of our pillars. We think that sponsorship would be one of our pillars. We think that mentorship will be one, networking events. And when we look at the survey, you realize that actually unknowingly they touch into some of the things that the survey tells us that is missing, which is, having networking events where we can, as women, talk about career and so on, which was not necessarily available before. It also touched on capacity building. I think there's like more than 50 women who've been trained through 𝐭𝐲 with Women in Finance, and more things are on the way in terms of capacity building, targeting young women who don't have that access. And then we talk about mentorship. I think there's like 25 mentees in the first cohort in 2024 and 37 in the second cohort this year. We went from 11 mentors to 15 mentors. So all of this, I think, is speaking to what the survey is putting in, is showing us. And I think it's encouraging because the survey has put into data what we now need to dig more into. So that's what was a ha-ha moment for me through the survey. Yes.
Good morning. I think the report does highlight something that was probably taken for granted. I think we still treat diversity as a compliance matter because you realize that one of the key issues raised is that you have several layers of management and organizations that women are growing through, but they're not retained. So which means it's not a deliberate strategy to have diversity in your institution, but more so of tick the box to comply and fit the buzzwords of this world this time. But I think it's a very good eye-opener. And I think some of the experiences we've gone through as some of the institutions I've worked for, you will see that some of the results, if you actually make it a deliberate strategy, then it pays off really handsomely. Thank you.
All right. For me, I think what is surprising is, I would say, what the report actually takes off the table. Because from the statistics, as we would have seen, clearly the preparation for men and women at the early stages of career, the difference is there, but it's really not significant to make a 30% promotion difference as the careers progress. And so what this means to me is that, in fact, in addition to the element that the level of ambition for both men and women is pretty similar. So train them, expose them in the early stages, seems to be equal. They all have ambition. But down the road, the outcome is very different in terms of the level of promotions between men and women. The reason this is encouraging to me is because what it actually means is that the reason that gap appears must be something that is within our control. And I think the governor alluded to it, the systems that we have built that then stifles talented, well-trained women as they progress through their careers, not to break that ceiling of senior leadership. And I think that is sobering to actually note, because many times it's easy to be comfortable with a headline number that says, we have a large representation of women in boards, executive management. And I think the report is very transparent in the fact that some of those positions, some of that statistic is because, there was a lateral intention to make that happen. But I think the fact is, it is something that is within our control. What happens to the women that we train equally as men at the beginning of their careers.
Thank you. For me, when I go through the study, what surprised me a lot is the promotion gap, specifically in the circles. I started thinking, why do we have the big representation, but the promotion gap still an average of 31% fewer than men during their career? This means that representation, the presence of women does not mean their progress. So we still have a long journey to go for. And with the recommendation of the study, we are committed that it will help us to close that gap. Thank you.
Thank you very much. And now I want to move to something that Konde kind of touched on in terms of sometimes we're doing this because of compliance. And I want to start off with Betty. You are a seasoned HR practitioner, and I want you to share your experience in terms of what role the workplace, whether that's norms, leadership stereotypes, what role do they play in actually slowing advancement for women in terms of breaking that pipeline?
Yeah. I want you to imagine, and here I think most of the people here are leaders. So think about the worker that you think is the best in your workplace. Most of the time, and I'm not saying it's everybody, most of the time is the person who shows off the most, that you see in your face. The person is always available, there's long hours, constant visibility is in your face, right? But so sometimes we prefer to think that those are who are efficient, and have a work-life balance are not that good, because we've been drilled to think that the one who is in your face, the one who is always there, is the most efficient. And think about the women who have not necessarily the time to be in your face all the time. Another bias is a similarity bias culture. Most of the time, we look at somebody who looks like us. It's not on purpose, but when you hire, most of the time, when somebody who speaks like you, thinks like you, comes, of course, the contact is better, right? You feel like, oh, we can talk about the same thing. And if already the pipeline of those who are on the recruitment panel or the promotion panel is people who are of the same gender and the diversity is already biased, there is, of course, a risk of reproducing that bias, right? The third one that I think about is the informal network one. Most of us, when we go to a certain level, we decide that, for example, we don't do dinners anymore because we have children. There's no way I'm going to spend all my evenings having dinners with clients. So you decide that, unfortunately, this is something that you're going to have to not to do. We all know the boys' rooms, the boys' groups, the boys' whatever, where people actually meet. Of course, after some level of whiskey or beer or whatever, people are, they're more happy. And the outcome is always a bit more positive than us in the morning for a breakfast meeting to discuss about, I don't know, whatever it is. So that is something that also plays a role in the norms that we've talked about. There's also the leadership stereotypes. How do we as an institution define what leadership needs to look like? If we think that a leader needs to be assertive, needs to be bold, making decisions, those common stereotypes that we have around leadership, because that's what we've seen. And at least now, in Rwanda, we now have a landscape where we see women being leaders. But remember before, women even were not wearing dresses. They were wearing suits with, trousers. And so there was this whole leadership stereotypes of what a leader needs to look like. Now, it's even worse in our continent. I work in 25 countries in Africa. And I used to make we have two shareholders, a German one and South African one, but of course dominated by white South Africans. And then we also have people on the African continents. On the African continents, you would see what a leader is. We must smell him, feel his presence. He has a huge office. And I use the he on purpose, a huge car, a huge office. And when he enters the room, we feel him, right? We feel his presence. This is the CEO. We saw you guys entering here at Marriott, driven behind, being dropped at the front of the office. So there is a whole aura, charisma that goes with leadership. And it's cultural, right? So when we look at these leaders, what do we expect from them? Protection. If you ask for most of our colleagues in sub-Saharan Africa, what they expect from a leader is protection. It's somebody who's going to be able to open doors for them. So what do we see in a protector? A man. Do you really think that Madame so-and-so is going to protect you? Not necessarily, right? So for us, this is also one of the norms of the things that unwillingly, unknowingly, we have put in our heads. The other one is a psychological barrier. Most of us, I think, went through it, is the imposter syndrome. You're there, you see all these others, you're like, do I fit in this room? Not sure anymore. I wanted this job, but I'm not even sure that I'm worth it. And I think most women, and it's been proven that most women suffer from this at certain level of their life. And the last one is the one that we talked about, which is the systemic inequities. So, the talent pipeline and so on. So it's those things that are the norms that actually, in our companies can affect, as you say. Yes, I hope I answered your question.
Thank you very much. You did more than answer. And I wanted to start with you because I was looking at how that sets the stage in terms of how do we actually now build a pipeline. And now I want to move to Maurice. Having led 3 banks and chaired the Bankers Association, you have had a front row seat to the evolution of the leadership in the financial sector. And if you would share with us what your view is in terms of how the industry moves from supporting women advancement in the principle to achieving measurable and sustainable progress in leadership representation. So how does that look like?
Thank you very much. So let me dial back a little bit to what I said earlier on at the beginning, which is what I thought was surprising to me from the survey, that women and men in banking, let me say finance in general, we hire the best and we train them. They all acknowledge that training, development plays a very important role. Okay, be that as it may, as you move down the ladder in terms of preparation from a professional point of view, begin to see a bit of difference exactly related to the matters that my colleague panelist just spoke about a short while ago. And so the question then is, so how do we make sure that the women that we hire and we train, early in their career transition across the various stages of their career, so that we deal with that 30% gap in terms of promotions as they progress to senior leadership. And I like to think that there are possibly 3 things that we could do as leaders in this sector. So one, and I think Governor alluded to it, of course, there's got to be some level of intentionality at strategic level, because if the institution itself does not see the picture and the presence of women in the various levels of the organization, not just at top management, but also, in the pipeline, then things fall in between the cracks, because guess what happens? Like I said, we will hire a few women in the boards, we will hire a few women in EXCO, and we publish a fantastic report, but we are not really paying attention to what is going on. And I think the report says it very well, that 64% attrition by women in the early stage of their career is a big problem, because we've invested a lot of money at that level and those women don't transition. So there's got to be a deliberate, institutionalized way of managing the transition, so that it's not just a number at the top, but it's really the rate of progression from entry to the top. And I think that would be a very good statistic to actually monitor, not just our institution, and I would even encourage as regulators that we actually begin to monitor that. I read a book, and the gentleman is called, he's a former CEO of General Electric, and it's straight from the gut. I forget his name now for a moment. But one of the things he said is that in his organization, they would actually measure the number of leaders that a leader has created, in their career, and that would be the mark of leadership. And I would say the number of women leaders, therefore, that we have created over time would probably be a very good statistic. That Jack Welch is the name of the writer I was trying to remember. So something like that at governance level, at senior management level, at strategic level, at board level, time bound and public. And I think in some way we're already beginning to see that weaving through our annual reports, our quarterly reports, and I think it's a good thing to do. I'll speak as a banker. I mean, we are all very competitive, and I think one of the things we could actually do is to begin benchmarking ourselves how we are doing. Okay, so I know Governor has already, put her cards on the table about the presence and the representation of women in central bank across the board. Could there be a benchmark that we can all aspire to and we begin to work towards without that being necessarily a compliance matter, but genuinely, with an intention that women progress through their career. And lastly, for me, and I think this is very personal, and I would invite other CEOs to see the same way, that it really takes the leader in the institution to look out and to make deliberate decisions, who to bring close to the table in terms of exposure, those stretch targets, those stretch projects, the level of exposure and presence of the women, because they are present, they're there, but it really takes a lot of intentionality. Sometimes, and I know my head of HR is in this room. I was looking at a short list of branch managers one day, and I said, but where are the women? Right? Because they were not there. And I think my head of HR, sort of had to go back and actually look for them. Because when you look for them, you will find them. They will not be on the surface, but you scratch a little more, you will actually find them, because we've not built the practice of bringing them to the table. So that is, as a real direct way of getting the women to be present and to be promoted and to be progressed across the career. And sometimes you've got to take the risk, because I think to the point she talked about, we definitely have a certain definition of who a leader must look like. It's probably something that we have inherited over history. The generals, the warriors, the kings, hence the reason, we build monuments and we drive big cars and all that. So it's coming from that history. But then we are living in a world of knowledge work, where that kind of a leader is no longer necessarily the thing that we are looking for. And therefore, it's probably about the time that women, actually on the table, not for the physical dominant trait of what we falsely know to be the trait of a leader, but for truly what leadership is, which is inspiring people to achieve, certain goals as a team, as opposed to, self-glorification in what typically we have known over history and books written about, the traits of the strong leader, if you like it. Yeah. So I would say, possibly around those 3 points, we might begin to make some progress in terms of, creating space for women to progress through their careers. Thank you.
Thank you, Maurice. And now I want us to move to Laurence. In terms of SACCOs, we know that SACCOs actually have women are one of their biggest clients. And just wondering how, given that we have women actually being the biggest customers for SACCOs, how can SACCOs actually leverage this grassroots presence to also nurture women into more leadership positions? How can you, because you have them as your majority clients, but how can you actually see how to grow that into women representation, especially since I think one of your aha moments was that they're not there in terms of SACCOs, women in leadership.
Thank you. Yeah, it's true that the SACCO plays a critical role in community financing, but also with the high number of women participation. But when you look at their representation in the SACCOs at lower positions, it's high. But when it comes to higher positions, the number reduces. This can be taken as an opportunity for us, for SACCOs, to have that big participation, can be seen as an opportunity we should all leverage on in different ways to transform those women into leaders. But before we go to those ways to transform them, we should first understand what is the challenge, what is the barrier that make them to be at lower positions rather than at higher positions. I was thinking about what the requirement of moving to those higher positions. We see that there is some conditions and the requirement like qualification, experience, and others. And if I look in my institution, for example, how women are struggling to get enough time to work for those qualifications and also to balance work and family responsibilities. It's not really an easy work. Yeah, it's they are struggling. So I was thinking how we can help them to overcome that barrier, because they are thinking, if I work for these qualifications, will I have what I'm expecting? Is there any policy that motivate me to do that such hard work? This is also a barrier that make them self-doubting and self-censorship on what will happen next. What we should do for them is first to encourage them, to put in place policies that will help them, that will nurture them from those high, to be ambitious for those high positions, like mentorship. When I talk about mentorship, I was thinking about an internal approach we can use first. For example, we can make an assessment of high potential women in the institution. You listen to them, you understand their challenges, what are their barriers. You inspire them through your own experience. For example, how I have been a leader. You inspire them, but also you give them continuous assessment so that they can feel they are able, it is possible to be a leader, yet you are a woman. Because every woman here has passed through those challenges, but it is possible because you have women leaders in Rwanda, and there are many, as the study has shown. Another thing is to put in place some leadership trainings for them so that they can increase their leadership skills. But also, you can also help them to get certification by giving them flexible time for doing exams, by sponsoring them, but also continue mentoring them, telling to them that they have also to keep their good performance at their job roles. But there should be also a motivation policy that link that effort with opportunities. It's not saying that the promotion will be automatic, but they'll be eligible. They feel that they are eligible to opportunities that will present if they have fulfilled all those conditions. I also think you can also, after the qualification or after filling the conditions, there is, for example, there is no opportunities yet, but you can still encourage them by giving them some responsibilities, like leading a project, like presenting in management meetings, so that they feel that they are valued. And when the opportunity present, you recommend them. That's what I can say.
Thank you. And now I'd like to bring in Konde. And I think for me, one of the things that was interesting about the study was that insurance ranked the lowest in terms of
Not the regulator.
in terms of looking at the sexual harassment, and I wanted to know how the insurance sector, how realistic is it that insurance institutions actually can commit to time-bound gender leadership goals, and what challenges do you see therein? And if you could also comment on that number.
Maybe let me take a step back and give you a bit of a context of our journey. That could be maybe a lesson, or it could be something we'll learn from, but we'll continue to push on our side. We are in the service industry. The service industry, for you to thrive in the service industry, you need to be trusted as a brand. You need to have really good quality support staff that serve people in the right way. And you need reliability, resilience in what you do. Now, all of us, I think all the men in the room here, I don't think we're all different from who I am in the sense of our mothers. Who do you run to when you believe you need something to be done reliably? It's your mother, isn't it? So we had a deliberate decision in our analysis for the strategy. we decided that for us to drive service and improve as an insurer, we had to drive diversity. Now, it started off as a strategy and one of the ways we can improve our business. But today, our staff stand at 50-50 across the board, from bottom to top, including the board. We're still lacking on the shareholder level, but that's fine. We'll get there. And what has it led to? Better decisions and the understanding of the customer we serve cannot be done one-sided. You can't design a product when you only have men in the room. We need to design a product which reflects the society we serve. And there are many other areas that I believe that we all need to think about deliberately as a strategy. I mean, if you have a factory and the factory runs 24 hours, you must draft policies on the HR side that actually accommodate women and men. It cannot be one-sided to the extent that women might have to do the overnight shift for 10 years when society has already shown in the report that that will be the reasons why, that will be one of the reasons why she leaves the industry. So on our side, we changed our policies to accommodate what the challenges are for women to thrive in the job. We have many ways. I mean, the head of HR is here, but we took decisions such as women getting a longer maternity leave after this, the policy-driven and the compliance part of 3 months. You can also continue to serve from home, but we give you a role that you can play that is accommodative to the situation you're in. So we kept on changing our policies. And I think what has it led to? It has led to innovation internally, growth ideas. And 4 years ago, we were the 7th largest insurer. And I think it's not just one of those drivers, but it's one of the key drivers for where we are today as the leading insurer in Rwanda. The progress has come from the changes we've made to advance and support women in what we do. And I think coming back to service, like I said about our mothers, you always know that when you get home, food is right. It's consistently the same food you eat every day, the way you like it. The home is in the same state. You know you're going to find it. And that's what we do in the service industry. You want to be served right. You want to be given, when you request for your insurance policy, you should get it on time. And if you intimate a claim, you should be served as per policy, not, oh, it's going to be a few more days, you need to fill this document and the other. We built an unreliable source of branding that needed to be changed deliberately by bringing the right sources of quality and personalities to change. Retention of customers is much better when we actually use diversity in our approach. So diversity in our system and in our policies, but also throughout the organization, was not the destination though. I personally believe that performance can be driven when you have two different sets of perspectives to what you're going to do. So performance was the driver. And today, performance is speaking in itself. Our results are speaking, whether it's on the service level, it's on the trusted brand. We were a not known brand at all, but today we stand somewhere that people can recognize who we are. And financially, we stand very strong. So kudos to all my female colleagues. I'm speaking here, standing in for you, but it's been driven by the fact that we included them. Thank you.
Thank you very much.
Can I just comment on two things? I was dying. You just
I could see you holding.
First of all, please stop talking about your HR people in the place. We don't care. It's your policy. It's not the HR people policy. You both of you guys. We said it. It's not a human capital thing. It's really a leadership thing. Yes, she will put the things in place, but clearly her being in the room or not doesn't really matter. Second, what's the shoe size of your second boy? You don't know. What's the shoe size of your second boy? You don't know. So I just want to stress you talked about the food being ready at home and so on. This is exactly what we're thinking about. The mental load of your female CEO counterpart. You're here, you're striving, you're talking about the business, the fact that you've grown, the balance sheet, you've grown the top line, the bottom line, and there's somebody else, something is happening in the background, somebody's taking care of things that you can actually, make sure that it's there. Your female counterpart is doing exactly the same thing for the shareholders, but in addition to that, she knows the shoe size of your second-born. She knows that your food is to be ready. So I just want these are the real things to talk about, and the rest is there. But I think that's important to say.
Thank you, Betty.
We're still friends.
I think it's a journey. It's a journey, and I think that's the importance of having all of us here in the room today to see how can we have a mindset shift. Because like Betty mentioned, there is unconscious bias. There's some things we don't think about, and just so I don't steal time from the audience in terms of asking questions, I'll just run over to Maurice in terms of your leadership journey. How it has looked like and what has shaped your perspective on the value of women in senior leadership within the financial sector.
Well, thank you. So I'm going to default to a personal story to bring this matter home. And I think I'm very deliberate about how I'll put this because it will tell the story about how we have evolved as a society. So I grew up in a school back home where I was born, a primary school in the village. And the thing that I always got told by my uncle, it wasn't my dad, was that I could never be beaten by a girl. Okay. So if I ever was placed behind a girl, I would be beaten. So I grew up thinking that girls were of a lesser ability in class, or at least I wasn't supposed to be defeated by girls, in school. And I'm talking about this because it really describes, the story about what happened. So fast forward, it was into a boys' school. So the story about girls, is not there in high school because it's a boys' school. Whether you are number 23 or 50 or number 1, it doesn't matter because it's boys against boys, right? So it didn't matter, all right? And so fast forward my A-levels, and I went to a girls' school, a top mixed school in Kenya. And guess what happens?
You were beaten.
Crushed.
Sure, you were beaten.
Crushed. By who? By girls. In what? In mathematics. And what? And physics. And guess what? Wow. All right? So we are all creatures of how we've been brought up, right? And so, that obviously changed my perspective because growing up, in school and going through that motion of accepting that, hey, women are as good, if not far better than you can be in anything, not just in the softer things that we do in life, right? So it bothers me that, even the women that we say are represented in senior management today, they are in HR and marketing. They are not in finance. They are not in IT. They are not in risk management. They are not in credit. They are not in mathematics. Right? So the same problem that I lived through is still being perpetuated by society. And I think for me, growing up with those experiences and down the road being led by women, who I would say with no doubt whatsoever that they could have been any less of leaders than a man would have been. I think that has shaped my perspective totally. What better to demonstrate that than being led by the governor of the central bank and who would who would in any way say that our governor as a woman today is less of a governor than a male governor would have been. And I think it's a call for me to say as a society we just need to transform, we need to transition, we need to change our perspectives to begin to see the presence of women not as a by the way group of people that we have to sort of try and bring them along to comply or so that we look good in society, but it's really as part of a real resource that has ability, that has competence to deliver return on investment, which is what my colleague has just spoken about, as opposed to ticking off the compliance thing so that we look good from a gender balance perspective. And I think to me that's the realization and the learning that I have come to know. Yeah.
Thank you, Maurice. And over to Laurence. I think having heard what Maurice shared in terms of how his upbringing shaped how he thought, but eventually changed because he got crushed by a girl or girls. How can we change or have a mindset shift in the sector of circles that's looking like boards, senior leadership boards and all the exco? How can we be intentional and deliberate in terms of having that mindset shift so that women are not just represented into entry level, but actually growing through their career?
Thank you. As Maurice said, this is a reality that we see at all levels of the society, where social and cultural perceptions still make women not progressing in their career. And in circles, that we work closely with the communities, and we see that the society has the perception that expect that men has to be leaders and decision maker, while women have to be supporters or have to be, they're not made for leading. That is the perception of the society. Yet they see them as good, hardworking, trustworthy, and reliable, but they don't encourage them to aim for those higher positions. This reality is seen at all layers of the society, even at board levels where we work. So I think the first thing to think about before the board can challenge the perception, they have to challenge first themselves, how they see that perception, how can they change their mindset. This can be done through, they can challenge themselves, but they can also be challenged by key stakeholders, so that it can be taken as serious. What they can do, for example, there should be an awareness program and training on the gender inclusivity for board members, so that this awareness and the training can change their mindset, what will also change the perception beyond the cultural belief, but also help to put in place, facilitate, and put in place clear policies that change that traditional organization culture into women's having them at leadership positions. I was thinking about when I was reading the study and see one of the recommendations, I thought about one of the policies that can be put in place, like gender diversity policy, where we should have clear targets, well defined and well reviewed at board level periodically. And if we can measure or evaluate our business target, how can't we evaluate also how our women are advancing in those positions? Yeah, it's true, we can track their progress. That's my view.
Thank you. Back to you, Konde. The insurance sector is currently embracing innovation and digitization. And MUA has done some works in terms of how women products are innovated for women. How can we ensure that even with the work that you've done, it's spread across the entire sector and women are actually represented in terms of having them lead leadership areas such as insurtech, data, innovation, and how can actually products or services be built, keeping the woman in mind when they're having this kind of products and services developed?
Let me start by, I think, starting off my point that my colleague Betty attacked. But
You remember the shoe size?
I absolutely do not remember the shoe size. But Betty is a colleague of mine. We've been working together for many years, and I think she used to make these points when we were together. She was head of HR, and I was part of the team, and she used to make these points very clear that we need to own it. And I think at this stage, I want to repeat one point, is we never did anything to comply. We never did anything to try and balance how we look. We have built an institution where we believe there must be a foundation within which a woman can feel free to join, given an opportunity, but it must be driven by a deliberate HR policy, where they feel they're welcome and where they feel the institution listens to them. And I think I'm saying these pillars, these are layers within which an ecosystem can allow others to copy the same, improve, but also the insurance industry is no different from any other service industry when it comes to digital and innovation, but we need to build these foundations for them. And after building a foundation through policy structure, we now need to build pipeline. The pipeline can also be supported by organizations such as Women in Financial Services. We need a source of reference as institutions. We need a source of reference where we see we can get better skills development, we can get better career advice. And I say that because, again, going back to our journey, when Women in Finance started, we were one of the first organizations to join, but also ever since its inauguration up to today, all our female staff have gone through its program of training and mentoring. So it's a decision. It's a decision we believe will lead to a better pipeline for us to tap from, better skills in several areas of our business. And then the growth area. Growth will be driven by the fact that you have the people on board, you have people trained, they are capable, but you also have leaders who embrace the fact that diversity within our team drives better results to our clients. And the final two layers is leadership. I think if you don't have a very clear mindset and mandate as management for you to find ways to perform, performance is not just the sales that we did today. Performance is the fact that we can retain the same customer we acquired today. And that's one of the biggest problems in insurance. We can use all sorts of digital platforms and so on, but the biggest problem we have in insurance is retaining a customer you acquired today. Now, that we've seen has been a major change if you have a diversity in decision-making, but also there is a human quality that we feel very comfortable when it comes to mothers and sisters, that what they tell you today and they bring it up next year for renewal and they are very clear on the rules and terms and the changes, you feel much more on the side of honesty, trust, and it's been paying off. So from a leadership perspective, we've taken a strategy that it is something we should do, not because we're meeting something, but it's paying off. And I think if it continues to be the fact that performance is coming out of diversity, diversity is only a vehicle, but performance should be the leader in driving this sort of balance. Yes, thank you.
Thank you very much. And now to Betty. Again, in terms of embedding gender inclusion into talent management, succession planning, leadership development frameworks, what are some of the lessons that you've learned that you could share with the wider financial sector here in the room, but also mainly speaking on how do we retain the women in the workplace? They're coming in, but then they're dropping off along the way. What's something that we can do so that we see them actually maintained, but also not just maintaining them, but actually growing them so that they can also have seats on the table?
First of all, it starts with what you saw, but at the institution level, which is data. Most of the time, when we go to the board and we show your data on human capital, is just numbers, just as you said, to tick a box and make sure that everybody knows we have this number of people, this number of female, blah blah blah. We don't go deeper into what is really happening in our organization. So the first step is really to start with really having relevant data that are going to help us do the right things. Second is to maybe redesign talent management. And we put objective criteria. I give an example. When you want to promote somebody and we ask you to put in writing why you think this person is worth a promotion, most of the time, if it's just because I think this guy has potential, it's very difficult to put it in writing because you know that it's going to be obvious, right? It's easier to have it around the table and discuss it, but when we say you actually have to put in writing why you think that this person is worth a promotion, because most of the time women have to first prove performance before they are put at the table or be eligible to actually be promoted. But most of the time, guys, it's about the potential we see in him in being the next leader. But once we put it in writing and we say, put it somewhere, I think normally after some times it becomes, you actually are subjected to the mirror that shows you your own biases. We know that when we push people, when we do our succession planning, we push people to at least include 2 or 3 women. After 2 or 3 cycles, we see the numbers increase. We've seen it in our institution. It doesn't happen the first cycle, but you can see it as a second and third cycle because we take them through assessments, through personal development plan, and you see that it bears fruits after 2 or 3 cycles. The third one is the one I talked about before. Is really rethink our leadership models and rethink about what we see into leaders and put it in writing, sit as leaders, as board members and say what types of leaders do we want to see in our institution. Once we have that idea, I think and when we include, and honestly today at the stage of AI, empathy, emotional intelligence, all those traits that are making people good leaders that were not part of the leadership traits that existed or we thought were good leadership traits in 10 years ago, now are going to be the ones that make the difference between one leader to another. So that is something where I think most women here are at a competitive advantage when it comes to being able to get to the world that is being built by AI, by all these things. Maybe normalizing flexi work. I know when we saw the first slide around Rwanda, Africa, and the world, you can see that in the world, you have better data in some of the aspects, especially when you grow through the ladder. And in most economies, many people work part-time jobs. You have the possibility of not working full-time. Unfortunately, we're not there yet, right? We don't have that possibility that much. And we feel, anybody, I'm sure if you go to, and I'm the same, you feel guilty, you feel that this is going to be, and you feel that you're going to be penalized by looking for more flexible or not a full-time job. So maybe that's a mindset shift that we can think about it without, having career penalties. This one has been working 3/4 of a full-time job. How should I even promote him or her? And also have hold leaders accountable. That's what I just said. It's not just HR. Really, it's to say, this is us at EXCO level. This is at board level who think that these are the right thing to do. So I think in short, I would say, you move from intent to system design, to accountability, and then to having a culture shift at the end. And I think that's, yeah.
Thank you very much. I'd like to open the floor. I see I still have 7 minutes to take 2 or 3 questions.
Having women in the leadership, as we saw with 30, we are the best to continental and the global level, doesn't mean that necessarily things are going well. We still have gaps. And the study also shows how we can close those gaps. This is really a good thing, and I really commend the 𝐼𝐸𝐴𝐸, I forgot to say that, 𝐼𝐸𝐴𝐸 and the National Bank for really putting this shedding lights on the gaps we have just seen. And again, I would say that, again, if we are having women, the 39% at the board, we need also to go further. The women in the board, their voices, are they heard? Which commission at the board are they leading? Are they the chair of the board? Because this is another step we need to go, so that women, really the representation of women is really seen at all levels. The second thing I wanted to say is that also, again, the study is giving us 3 high-impact actions. I think to set the target, to disclose the progress, and establish, I think, the service accountability. But I was thinking that maybe we can come up with a clear roadmap for all the institution, clear roadmap on how we are going to implement this. We set clear targets, clear KPIs for all the stakeholders that were identified to support into implementing these actions. And also at the same time, we need to establish like a regular period or institutional setup or forum. We already have the CEO forum that can, I don't know, call everyone, and then they share what they have done. We see the target, we see the progress. We also share best practices of what is happening here and there, really. And when we conduct another study, at least we can see the progress or maybe new emerging gaps we need to close. The third thing I wanted to touch on is about, it has been said in the study, the mentorship. And this year I had opportunity to be invited in different, forums of talking to young girls in higher learning institutions. I had 3 of them. And what you see immediately is that the young girls who are in higher learning institution, high school, even primary, they need to hear the stories we are talking about here. Because we heard it from MD Maurice. When they're still young, boys and girls, they hear different discourse. For girls, the Rwanda turabizi, they tells you, diploma yawe n'umugabo, you know? They hear that when they finish even high school or higher learning institution, the next thing they think, when am I getting married? When am I going to have kids? Sometimes this is because this is what they have been told since the young age, which is different for boys. We heard it. And really going back to these youngsters, the women, and the women I'm seeing here, the CEOs who are here, to really to give that story, not only to the girls, but also to the boys. They can see that women can lead institutions, they can have ambitions, they can go as far as possible. These young girls, they need to hear that. Sometimes when I talk to them, I tell them that when you finish to study, can you wait a little bit, not get married? Just wait like 5 years. You know what you want. You know what you want. You set your goals. You know when you're gonna have your babies. When you're gonna be married. But in the meantime, build yourself. Know who you are, and so then they need to hear the stories of you and all of us. How have we been able to maybe to reach those leadership, so that by the time she comes to looking for a job in a bank, on an institutional, she's already empowered. She knows what she wants. And she will not see the 60% exiting number. It will reduce because she has already built herself. Thank you.
Thank you so much. My name is John from Access to Finance Rwanda, and I happen to be part of the technical team that worked on this report. So having this great panel and other leaders in the financial sector present here, I think it will give us an opportunity to confirm or reject some of the hypotheses we had as researchers. So my first and small question is on the, and I think Sandra kind of touched it in a very smart and diplomatic way, is about the pay gap between men and women. Taking the example of the salary band between 1 million and 2.5 million, we only have 11%. This is for non-managerial position, 11% of staff, of women, against 24% of men. 24%, 11%, non-managerial position. So one would ask whether, is there any confidence in the negotiation of the salary between men and women at recruitment level, or there is something that is hidden in terms of access to information during the negotiation that will not be in favor of women. So I think we'd like to hear from you. So the other thing is the early career exit, where we have, and I think Sandra mentioned that 64% of women leave against only 30% of male. So what's the issue here? Is the environment sound enough? And I think Betty mentioned some of the things related to this. So is the environment really conducive for career progression for women? Thank you so much.
John, are you directing them to anybody specific? Or anyone?
I don't want to pinpoint anyone, but even any leader, any CEO in the room can also ask, respond to that. Thanks.
There's another question there.
Good morning. It's such a great joy to be in this room this morning and hearing from the great leaders. My name is Salma. I lead an organization called Gate Consulting Group, and Women in Finance has been a great partner to work with in mentoring the young women and prepare pipeline for women to pursue decision-making roles. Looking at many of you in the room, I know we've partnered in one way or another, and pretty much all the panelists today. So my questions, one is a question, another one is just a reflection to all the leaders in the room. And I'm building from what Betty has shared regarding the unpaid labor that women face more than women. So as leaders, can we start conversations with our male employees in the workplace? I'm thinking of how can men also take responsibility or ownership of sharing this workload that women face. As much as men might be pursuing growth and opportunities internally, their sisters, their wives are in another institution somewhere and are not able to pursue these opportunities because they're not, nobody's supporting them. So what conversations can we start in our workplaces to make them understand the importance to share these unpaid labor or responsibilities that women have at home? My second question will be around deliberate decisions that we are making in our institutions. When we look at policies, when we look at having more women participating or representation of women in organizations, those are easy metrics to track, but there could be other metrics that are much harder, such as conversations that need to be intentional in our institutions to make sure that women have opportunities, that the implicit biases are addressed. For example, what Vanessa was sharing, that inputs from women are not considered versus men. I was listening to 𝐭NDE also sharing how women have 4 months of maternity leave. That is great. But while I'm on maternity leave and probably given a much easier role to do that is behind the scene, what is happening is another male counterpart will have strategic project to touch on that will give him opportunity to showcase his capacity, be strengthened, and that man will pursue growth and advance much faster than me, who is doing a very easy job at home. So how can we address these things? And for me, I want to hear probably from both Maurice and 𝐭NDE, what are you doing in your institutions, or what can you start doing to make sure that these implicit biases are addressed, and you can go beyond just the easy metrics that Gender Seal is giving us, or all these nice policies you're putting in place. Thank you.
Thank you very much. I think we can take those questions. Betty, would you like to go first?
Well, let me look at the pay gap, and then maybe 𝐭NDE and Maurice will do that. I just want to say 𝐭NDE is one of the best he for she. It's just that I had to tackle him. We're good friends. No, I think in terms of pay gap, it is the way we're wired. So the best way to avoid these pay gaps is really having it within strict boundaries within your company to make sure that the leeway for negotiation is as minimal as possible. Because believe it or not, the way we are wired, we don't like conflicts. We've been raised not to have conflicts because we're the pillars of the home. We don't want conflicts. We don't want to be showcased as the one who thinks, first of all, there's this psychological barrier of the imposter syndrome. Am I sure that I'm really the one who deserves this? Most of the time we see it when we put an advert for a job and there are 10 requirements. When a woman has 9 of the 10 requirements, sometimes she doesn't even apply because she's like, they said 5 years, I only have 4 years. I'm not going to do that. A guy has 2 of the requirements. And he says, try me. I'm here. I can do this. Right? So it's all a psychological way of how we've been wired and she mentioned it, the way we've been raised to actually, it's a survival thing. If you want to take care of a home, you need to avoid conflict. You need to make sure. So you apply the same skills at the workplace. And then when it comes to negotiating your salary, most of the time you look at something that you say, I just want to be paid at the right level and make sure that there's equity. I don't want to be the least pay at the same level, but at the same time, I'm not going to bother you so much. Yet our male counterpart will be like, you either pay me this one or you or not. But then what does it do to the person who's negotiating is that clearly there must be value behind it. If somebody is so bold to tell me that this is what I'm worth, of course there's value around it. Of course, sometimes there's big, we regret a lot. We're like, this was an empty box. But by the time we realize that, the salary has been paid. So just to answer your thing, I think there's nothing that is intentional from the organizations. I don't think that there's any organization that decided that they were going to pay women less. It's just that slowly and slowly, this is how sometimes, this is the system that is in place allows those disparities to be there. Yeah.
Thank you.
And maybe one additional comment to that point about salary disparities, and it's surprising but not very surprising in the sense, surprising because I would be very surprised if any institution in the financial services would be supporting a system that disadvantages women in pay scales. But I'd like to think that perhaps also it is exactly the issue that is being highlighted by the survey about what the women do in financial institutions, because I suspect that most financial institutions will have pay scales for different jobs depending on the strategic nature or complexity of those roles. So, if we know that 17% of women are in finance, then it goes without saying that, finance roles typically, will probably pay higher than, a marketing role or a HR role at entry level, because of the qualifications. I'm just, postulating that might be one of the reasons. But it might be interesting to actually see whether that disparity carries along the various scales of the career of a woman. But I'm just guessing that might be one of the reasons. Yeah. Okay. I'd just like to make a comment, and in some way, perhaps answering the exits question and the unpaid labor question, and I think Salm has said it very well. When a woman is on maternity leave and the choice is to give them the lightest work to do, I don't know whether that is really helping them or not, and maybe there's a question that can be debated. I like to think and be very practical that women were women before they became CEOs or became managers. So if it is maternity time, give them the peace and the comfort of being on maternity. Yeah. What is the point of asking them to do tiny little bits of work? We know that their focus is in bringing up their baby. So give them that space, give them that opportunity to take care of the family. When they come back, they'll come back fully engaged, mind, body, and soul, to actually pick up the journey of progression. Because I've seen when they come back and they're fully energized, the only thing is, of course, the systems that we create become very short term in nature. Because then if you're looking at a woman within a 1 year period to determine where their career grows, and they just happen to have had a baby, then there's a problem. Because then we should be looking at women in the totality of their career, their abilities, their competencies. So what that they were on maternity leave for 3, 4, 5 months. When they come back, they are still the competent woman that can actually lead an organization. And why should that disparity be there? I think it's just a mental, organizational, societal norm that we need to destroy. That having babies is not a disadvantage, in a career. It is part of being human. That's how we sustain humanity, right? And it's necessary. It's an important process that women have to go through, and we must give them the opportunity to go through that, comfortably and in a way that brings them back to the job rail, ready, fully engaged, body and mind, and soul to deliver. And I'm sure they do. Yeah.
All right, I will also add just a few remarks, and I think I will tackle 3 questions all in the pay gap, the environment, but also the metrics that Salma had mentioned. From experience, and it's still work in progress. From a structural point of view, as an organization, we are built to accommodate societal changes. And I think we do that through decision-making committees. So we have, for example, an HR committee that is split 50-50 or even more, but it's a clear representation of who we are. And the decisions we make are based on a structural approach and data that Betty mentioned. So, for example, the pay gap part, if you're an organization and you do not know the benchmark of your industry, then there is a problem. There must be a benchmark of the salary in the market in your industry. That benchmark should drive the decision-making to the committee on what roles are taken by who, but also on what sort of pay is relatable to those roles. So if you have 4 years in banking and you've been a risk manager and you're moving on to the next role and you need at least 6 years within that field, it's very clear. It's data driven, but it also gives room to the committee to make a decision. And if we don't have that, and everything is always about dialogue and deliberations between different people, it's always going to be a problem. I think also drafting and formalizing every decision we make. That was also touched by Betty. Dialogue happens between, on a whiskey table and so on. No, we want those dialogues to happen within those split committees where decisions are made. Of course, that's helped us a lot in building also an environment that accommodates our female counterparts. But all in all, it's still work in progress. We believe that it's giving us a clear talent advantage in the market and competition as well. So we still have a lot of work to do, but we're getting there.
Konde, if we applied, you and I, to a job, and you brought the benchmark thing, I can bet you would even question the benchmark and say you need to change this benchmark, and you would still end up having a higher salary as me.
That's true.
Bro.
Thank you very much. And I just want within a second also, just a parting shot from the panelists. And we'll start from the far end, from Laurence, and coming towards this side.
Thank you. Mine will be it's like a call to all SACCO representatives here to leverage on the trust the community has put in us and take it as an opportunity, not only to empower women financially, but also to help develop the next generation of women leaders. Yeah.
So I think my parting shot is obviously a reflection on the outcome of the survey. So one for me is a realization that principles they are free, they don't cost any money, but real progress gets budgeted, it gets measured, it gets tracked, and so for women to progress in their careers, that requires specific budgeted actions that will call for capital investment and tracking by all stakeholders in institutions. Because one institution doing well with another one doing similar, eventually, the entire market, does well.
My parting shot will be, I think when leadership reflects the diversity of the customers we serve and the country we live in, then we develop better products. Our outcomes are much more stronger, but we have a much larger impact on our country than we would have from only one end. Thank you.
So I had two things. One is let's keep these discussions at boardroom level, not only at EXCO level. Let's make sure that it's actually, and we live by example. Living by example being, ensuring work-life balance is actually your motto, ensuring that you're actually portraying those leadership qualities that we think are going to be the qualities of the future. Second, please join Women in Finance Rwanda if you haven't done so, because this is where exactly we're going to have this kind of conversation, the conversation that are going to question our bias. And that's what we're doing. I am biased too, and I have to always question those biases. So I think it's a right platform, because we're talking to entry-level young girls, middle management, senior, and board-level women. So I think it's a good thing to do.
Thank you very much. A round of applause to our panelists. And some of the key takeaways that they mentioned, I think something kept coming back, being intentional. We have to be intentional about our policies, about what we're putting in place, how we're setting our environments, and mentorship and sponsorships also come to play a big role in terms of advancing women in their careers. It was a pleasure moderating this panel. Again, my name is Vanessa Katana. Thank you very much.
Thank you. That was a truly enlightening discussion, very honest. And I loved how the panelists were not just answering the questions, but they were challenging each other, and that was really good to really get to witness. Thank you all to all of you for your participation, for sharing your insights. And we're heading towards the close of this session. Before we even do that, I want to maybe just ask you by a show of hands, how many of us have really been challenged by the discussion that we've had and we feel like there's something we can pick up and apply in our day-to-day job? How many of us, by a show of hands? Almost all of us. Amazing, amazing. And so now for the closing remarks, I would like you to help me welcome Founding Chair, Women in Finance Foundation and NCBA Bank Group Director for Business, Miss Lina Hijiro. Amazing. Let's continue with the hand clap until she gets here. She deserves that.
Good morning. Is it still good morning? Yes. Good morning, everyone. Hasn't it been great? Oh, good. I feel like I've won the ball. We have won the ball, right? It feels like that. Well, I'm closing, and please blame AI if something happens, because I checked with AI, and AI says if I am closing, if you're doing a closing remarks, you become informal. So if you blame me, if I'm, please, so allow me to just be, I know it's been 2 hours and this has been fantastic. So many people have worked on this. I have to just start with personally saying, thank you, Honorable Governor. We started this conversation over tea, actually, just when she was Deputy Governor, and it has become a reality. All the linkages that the Honorable Governor has had in her history, she literally transferred them to the sector through the Women in Finance Foundation. Let's give her a clap for that. And all of you here, Access to Finance former CEO, Yachu. He did what we all need. He challenged me. I do these things called learning lunches. And he said, Women in Finance Foundation is not going to have legs if you don't have data. And I really thought, what are we going to do? We're just CEOs in the sector. We're not government. And he says, no, you go figure out how you're going to do it. We'll give you the funding. Can you imagine? And this is where we are today with a fantastic team from the Central Bank, led by the governor, and a lot of the teams here, Access to Finance Rwanda, all the members of Women in Finance Foundation, even those who are not members have contributed. Thank you very much. So as a former CEO, and let me be practical. What are we going to do? Right? You're going to leave here thinking, what? So I've been thinking about it, and I thought, let's just start with the 64%. If your auditor had come and said to your board, dear board members, you have been losing, last year you lost 64% of your customers. What would happen? The CEO would be shaking, investigations would start, reviews, dashboards. It becomes this strategic issue. It's not an operational issue. So I would really like us to move from, it's an HR issue. It is not. The discussion today is strategic. You would not want to lose customers 64% in a year that you've invested in. You're hoping they were going to give you that P&L, that balance sheet, and you've lost them in a year. That's not something we take lightly. But so then what do? I thought of two things in reflecting. The big one is you don't just get appointed to a role. You build capability first. So everybody thinks, you become CEO. You don't just become CEO. And I can point to some people who became CEOs with me, same bank, Karine, a lot of INMers, former INM BCR. What happens is you build capability first. You build capability for opportunity to connect. And I'd like to pose an example. Junior Exco. Do we know what Junior Exco is? So Junior Exco exists in some countries. And what it is you get a Junior Exco that's set up like a real Exco. 10 young people who put their hand up, who compete. You make sure it's balanced, 50-50. And you give this Exco strategic tasks. What are you doing in that process? You're preparing readiness. You're providing visibility. Are you hearing? Like feel like church. And it's something we can all do. And can you imagine the feeling Ineza, was it Ineza, Sandra? She would have put her hand up, and even if she's in that Junior Exco, she's still remembered. She would still be visible. She can still put her hand in for one of those projects. She can send an online comment and still remain visible. I'd like to encourage you to consider a Junior Exco as one of those practical things. Let's move on to the second one, and I'll finish so that you get your chai. The second one is something I've thought about, and I mentioned it in the Bankers Association once, is why don't we have financial sector ECDs? It'll be the first in the world. And how would this work? By the way, ECD is not a women's issue. It's a family issue, right? Let me tell you a story, and those who are here will know. With my former employer, not former, in Rwanda, we were just thinking about how do we manage maternity and paternity. So during our EXCO meeting, we said, let's extend paternity to 14 days. Was it, Erica? 14 days. That was not actually, and it's the men in the EXCO who were asking for this. But the interesting part was, they said, we don't want to take those days right when our wives have children. Do you understand why they said, do you know when our wives have children, our house is flooded with people, women, workers, we're not needed. In fact, we want to find somewhere else to go. But the minute our wives go back to work, the stress begins. And so the men in our EXCO said, we want to be able to take the 14 days within 3 months. And it has worked. I mean, I think some people can comment. It was just a small tweak which has touched a community. 14 days, we want to take it as long as you allow us in that 14 days, because when our wives go back to work, we're the ones carrying all the children. Then suddenly, many of the men on our boardroom said, somehow, after 3 months, when our wives go to work, everybody is sick. We don't know why sickness happens. Every kid gets sick. So we are the ones in the clinic. And so we need that time as the men to make sure we hold the family together. That's a tweak that you can do. You can do many things. And also, I think somebody mentioned flexi time. We also discussed post-maternity. Women can have 6 months flexi time, agreed with the employer, with their line manager. So basically, after the 3 months, I think I can see some people who are beneficiaries. After 3 months, you just agree, am I starting at 11? Or am I starting at, some women wanted to start at 7 and leave at 2. And it worked. So it's not that it's magical. It's to say the decision to look at family will make a stronger institution. And the people who you're working with will feel a lot valued, right? So I'm talking as a practitioner. The other thing, promotion doesn't have to be up. Who says? Promotion can be depth. So I'll give you a personal example. I've always been in commercial. I'm there, it's the deal, it's the motivation. Then I get a role in the region where I'm looking at compliance and audit and operations, and I'm looking at 3 countries. Of course, at first sight, you say, wow, that's breadth, right? But for me, I had no idea how I'm going to influence Maurice and other people to do what they need to do when I'm not there. Because all I knew was influence. You get there, you talk, you negotiate, get the deal done, see the numbers. Now, I am far. I have to influence outcomes from a distance. That's a whole other school. So what I'm trying to say is growth doesn't have to be up. Look at your institutions and ask, are we creating pathways where growth can be sideways? Are we saying, can somebody say, I don't mind moving this way? It's a sideways growth, but it's depth. And what you're doing, you're creating capability. And a lot of the capability comes, as some people have mentioned, projects. It can be being taken to another part of the group if you're in a group structure. And I think I see MTN here. A lot of that happens. And so you find people with capabilities. So I encourage you, we're not saying we all want up, right? We also want side, but with depth. And can I put my hand up and say, give me that sideways career opportunity, right? I don't mind pausing on upwards. And many times women come to me and say, but I'm being told to stop having children. And I don't know if you've all seen Japan. They're having a problem. They don't have babies. It's a real, having children there's a purpose to building community through having children. So I tell women, personally, this is what I say. You can pause on growth this way, but you make sure you have depth. Take those certificates that are being offered in the organization. Offer to do other things. But as you're having your children, you can pause. You can pause on the up, but don't pause on the depth. And don't be forgotten. So I don't want to take too much time, but I want to really appreciate that you're all here. I'm open to being jabbed with questions. I'm lucky I'm not with Betty on the panel. But really, this is a conversation that's, as much as I may be saying it in a light note, it's a very personal note for all of us here. We can't have our sisters. Actually, let me close with a story. We were doing an interview for senior leaders at one point, and I chose to ask a question about these 2 leaders, well, actually male and female, that's why bias is in all of us. These 2 leaders, I asked a question. I said, what's your view about gender and roles in your organization or in general? It's so interesting. 2 of them said, we won't hire women in audit. And we were like you, we were so shocked. I even moved backwards because, the panel was mixed. We were some people in groups, some people, and we go like, what? Audit? So we ask why. Oh, women can't have difficult conversations. Can you imagine? But those are biases. By the way, that's a woman and a man. So we couldn't judge. We just said, this is coming from us, society. And the one on the P&L, they both said, we would not hire women in sales. Sorry, I haven't been talking. We will not hire women in sales. We said, why? One of them said, I am tired of husbands And why are mothers telling me their daughters are out there selling? So the way and so did the man. So you can imagine if you had a daughter, even a man in that organization, because these people were senior. Can you imagine the block? It's like they won't tell you can't get into audit, but you keep getting blocked. They won't tell you want to go out, you want to sell. But somehow you put your hand up for interview, your interview doesn't go through. So there are biases we need to look at. So the question we need to ask here, as the governor said, and many of you said, we need to pause and look inward. Who are you promoting? Who are you sponsoring? Whose name is coming up? Like this. And why is it coming up? Are we really looking at that seriously? This is, as the governor said, talent is a strategy issue. It is not an HR issue. Rwanda can. So, financial sector ECD, junior excos, a balanced pipeline that is sustainable. That's what we're looking for. Both men and women in the report actually said they don't know the policies in the organization. So we need to look at both men and women and just go inward and do your own data search at temperature. Look at temperature. What's the temperature in my organization? Yeah? Well, thank you so much on behalf of everyone here and the time you have made. I'm hoping, as I was mentioning to the governor, we'll have, there's something called a gender balance index. The Monetary Fund produces one every year for the world. It's something probably the regulator can consider. And it just puts us back, because if you don't have your numbers, you don't know what you're managing. But let's have a human spirit behind what you can do uniquely for your organization. Thank you very much.
Amazing. And thank you for the key practical takeaways. We do appreciate. We have come to the end of this session. And as we know, as it has been said, the Women in Financial Services Rwanda 2025 study was commissioned by Access to Finance Rwanda and the Women in Finance Rwanda Foundation in collaboration with the National Bank of Rwanda and conducted by Oliver Wyman and myself.